All right, listeners, let's get ready for another deep dive.
Yeah, let's do it.
Today, we're going head-to-head with two silver miners, Avino Silver and Gold Mines and Endeavour Silver.
Two big names.
Yeah, two heavy hitters. And to help make sense of all of this, we have a stack of Q3 reports, investor updates, and management discussions.
Got all the goods.
We got it all. And by the end of this, you'll be able to judge this silver showdown for yourself.
Absolutely.
So let's just jump right in. What's interesting to me is that even though both of these companies are mining for the same metal silver,
Yeah.
their stories in Q3 are completely different.
Yeah, it's fascinating that, right? We're talking about the same metal, same kind of macro environment, but very different stories coming out of these two companies.
Almost like they're playing different games in the same ring.
Yeah, for sure.
So let's start with Avino. Their revenue is up 19% year over year.
Not bad. Not bad at all.
Not bad,
Yeah.
especially when you consider their silver equivalent ounces sold actually dipped a bit.
Right. So they're making more money selling less silver, which means the silver price has gone up.
Yeah, higher metal prices helped them out,
Mm.
but they also sold some gold.
Yeah, that's right. Helps to have a little bit of diversification in there.
It does. So it shows how much leverage a smaller company like this has to those market swings.
Oh, yeah, for sure. I mean, when you're a smaller company, you're really at the whim of those macro forces.
And they're swinging all the way to the bank with a $1.2 million net income this quarter, compared to a loss last year.
Turning it around, which is great to see.
Yeah,
I mean, anytime a company can go from, red to black, that's a positive sign.
especially in a tough market.
Yeah.
Even the Mexican peso taking a dip against the dollar helped them out.
Yeah, currency exchange rates. I think a lot of people forget about that when they're looking at mining companies. They think,
Mhm.
we're just talking about the price of gold and silver.
Right.
But really, the currency that the company is operating in makes a big difference.
And Avino is operating primarily in Mexico.
That's right.
Yeah. So that exchange rate really matters.
Big impact on their bottom line, for sure.
But what really impressed me was Avino's focus on operational efficiency.
Yeah. They're doing a great job there.
They're really trying to control costs. Their cash costs per silver equivalent ounce are down 12% year over year.
That's impressive.
Hmm.
Yeah, anytime you can reduce your costs in this environment,
Yeah.
that's a real win.
And that makes them look really good.
Yeah.
But I'm looking at their mill throughput numbers here, and it's still below capacity, averaging just 720 tons per day.
So you're saying they could be doing more?
Yeah. It kind of feels like they're leaving some silver on the table.
Well, it's a tricky balance, right? Because you don't want to push your equipment too hard.
Right.
You want to make sure that you're not, put things at risk by running things 24/7.
Right.
So it's a bit of a balancing act.
That they are running it 6 days a week.
Yeah, 6 days a week. They are putting it through its paces.
And they're aiming for 2,000 ton per day average.
Okay, so they're getting there.
Yeah. But they're hesitant to go full throttle
Makes sense.
because of wear and tear and staff.
Yeah, I mean, staffing is always a challenge in this industry,
Right.
especially, qualified, experienced people. It's hard to find those people.
It is. It's a tough industry to work in.
Yeah,
So it makes sense that they're trying to be cautious and make sure they don't burn out their employees.
yeah. I think that's smart. You want to take a long-term view of this
Yeah.
and, treat your employees well because they're the ones that are really making this happen.
Exactly.
So I think it's a good approach.
So some operational challenges to keep in mind.
Yeah, I mean, no company's perfect, right?
Right.
Every company has its challenges.
But overall, Avino's putting on a pretty good show in Q3.
I think so. I think they're doing well.
Now let's switch corners and see how Endeavor's doing.
All right. Let's see what they've got going on.
First thing I see, a net loss of $17.3 million.
Oof. That's a big number.
Yeah,
Not what you want to see.
not what we want to see.
But let's dig a little deeper.
Yeah, let's see what's going on.
Because often there's more to the story than just that headline number.
Right.
And in this case, there is.
So it turns out it's heavily influenced by a $19.4 million loss on their derivative contracts tied to gold and foreign exchange.
So basically, they bet wrong on the gold price.
Yeah.
And it cost them.
Ouch.
Yeah, hedging can be a double-edged sword, right?
It really is. It's like trying to predict the future, and sometimes the crystal ball gets cloudy.
Yeah, you never know for sure which way things are going to go.
Makes you think as an investor.
Yeah,
Do you prefer a company that's all in on the silver price, like Avino,
right.
or one that tries to cushion the blow with hedging,
Yeah,
like Endeavor?
yeah. It's an interesting question, and I think there's no right or wrong answer.
It comes down to risk appetite.
Absolutely.
So Endeavor's taking a hit on the financial front,
Yeah.
but what about their actual mining operations?
Well, their direct costs per ton are up 3% at their Bolañitos mine. mainly due to processing fewer ore tons.
Okay, so not exactly the efficiency boost we saw with Avino.
Not quite.
No, but there's a bright spot, right?
There is. There is a bright spot,
Hmm.
and it's a pretty big one.
Okay, tell me about it.
Their all-in sustaining cost, or AISC, per ounce is down 142%.
Whoa!
Yeah, big drop.
That's thanks to a combo of increased gold production and those higher gold prices we've been seeing lately.
Yeah, so that diversification is paying off for them a little bit.
It really is. It
Right.
proves that having some gold in the mix
Right.
can sometimes soften the blow when silver's being a bit moody.
Absolutely. I mean, that's the whole point of diversification, right? It's to spread your risk a little bit.
So we've got two very different pictures emerging here.
Yeah.
Avino is lean and profitable,
Mm-hmm.
riding the silver wave,
Yep.
while Endeavour is grappling with these hedging losses, but showing some strength in their gold production.
Right. So different approaches, different outcomes.
It's almost like two different investment philosophies clashing in the ring.
Yeah, for sure.
Which one appeals to you more?
Well, that's what we're going to talk about in the rest of this deep dive.
We'll have to dig a little deeper.
Yeah.
But for now, let's shift our focus to the future. What's next for these silver contenders?
All right, let's take a look. Both companies are looking to the future with some big projects, hoping to make big moves in the next few years.
Yeah, big changes coming.
Avino is looking towards a new mine called La Preciosa. They hope this will really boost their production.
Yeah, they seem really excited about this new mine.
It's got the potential to be huge.
I'm looking at their investor update here,
What are
and
they saying?
they're just waiting for the final approval to break ground and start mining.
Yeah, they want to start pulling out ore by the second half of 2025.
Pretty ambitious.
It is. But what's really interesting is that La Preciosa's silver equivalent grade is double what they're mining at their current mine.
Double the silver.
Yeah. Imagine the impact on their production.
I mean, that could be a huge boost for their bottom line.
Exactly.
But there's no official feasibility study yet, right?
Not yet. So investors are relying on Avino's estimates and track record.
So a little bit of a gamble.
It is. But sometimes you have to take a gamble if you want big rewards.
High risk, high rewards.
Exactly.
Now, what about Endeavour?
They've got their own mega project.
Yeah, their big project is called Terranera.
Right. It's a big one.
77% complete.
A lot of money already invested.
$258 million so far.
Yeah. They're really committed to this project.
They are. But remember that problem they had at their Guanacevi mine back in July?
Oh, yeah. The trunnion failure.
Yeah,
That's going to slow them down.
definitely impact on production.
Yeah.
And those kinds of setbacks can lead to delays and increased costs.
Absolutely. Mining is full of unexpected challenges.
It is. It makes you wonder what's the better strategy.
Yeah. Which one would you rather bet on?
Avino's smaller high-grade gamble with La Preciosa or Endeavor's massive, potentially riskier Terranera?
Tough choice. Both have their pros and cons.
It really does feel like two totally different approaches.
Like choosing between a speedboat and a tanker.
I like that analogy.
Which one will reach the treasure first?
Yeah, exactly. So we've got a sense of their plans for the future. Let's do a quick SWOT analysis to really see how each company stacks up.
All right, SWOT analysis time.
Strengths, weaknesses, opportunities, and threats.
Let's break it down.
Starting with Avino. What are the biggest strengths?
Well, their low production costs are a huge advantage, especially when silver prices are volatile.
Yeah, we saw that in their Q3 results. They're really good at controlling costs.
And they have a really experienced management team,
Yeah, they've been in the game for a while.
which always gives me more confidence.
Absolutely. And of course, we can't forget about the potential of La Preciosa.
Yeah, that high-grade ore could be a game changer.
But even the best fighters have weaknesses. What are Avino's?
Well, their reliance on a single producing asset is a big one.
Yeah, if anything happens to their Avino mine, their whole operation takes a hit.
Exactly. It's all their eggs in one basket.
And the mill throughput issues we talked about earlier.
Yeah, they're working on it, but it's still a concern.
But let's not dwell on the negatives.
Right. Let's look at the opportunities.
So for Avino, it's all about La Preciosa.
Yeah. If it lives up to the hype, it's a massive opportunity.
And they could find even more silver at their current mine through exploration.
Always the possibility of finding more.
But there are always threats to consider as well.
Yeah. What are you thinking of?
Well, silver prices are unpredictable.
Always.
And the political situation in Mexico could change quickly.
True. And there's always the risk of some operational mishap at their mine.
Right. So those are the risks that come with a smaller, more focused operation.
Okay. So let's move on to Endeavour. What are their strengths?
Well, unlike Avino, they've got a diversified portfolio of mines.
That spreads the risk.
Exactly. And Terranera could be a huge boost for them.
If it all goes according to plan.
Right, and they've got a really strong track record of exploration.
They know how to find silver.
They do. But
I-
what about weaknesses?
What are their vulnerabilities?
Well, their costs are higher than Avino's.
Yeah, that's something to keep in mind.
And we saw what could happen with their hedging strategy.
Yeah. Those losses in Q3 were a reminder that hedging can be risky.
Plus, they're carrying a lot of debt to fund Terranera.
That's true. Lots of money on the line.
So any opportunities for Endeavour to improve their position?
Well, getting Terranera up and running smoothly is the big one.
Yeah, that's their top priority.
And their exploration project at Pitarrilla.
Yeah, that has the potential to be a high-grade mine.
Right. So lots of potential there. And of course, there's always room to improve efficiency and reduce costs.
Always room for improvement.
Now, what about threats to Endeavour?
Same as Avino, volatile silver prices are a big concern,
Always a factor.
and any delays at Terranera could be costly.
Yeah. They need that project to succeed.
And they're facing stiff competition from other big silver producers.
It's a tough market out there.
So both companies have their strengths and weaknesses.
It's a close match.
Makes you wonder which one would be the smarter investment.
Yeah. Which one comes out on top?
Maybe we should think about it from the perspective of different investors.
Yeah. Different investors have different goals and risk tolerances.
Exactly. So let's consider those factors as we head into the final round of this silver showdown. Okay, so we've looked at their financials, their plans for the future, strengths, weaknesses.
We've covered a lot of ground.
We really have. But now the question is, which one is the better investment?
The million-dollar question.
Right. But before we crown a winner, let's talk timelines.
Timing is everything.
It really is. In the world of investing, patience can be a virtue.
Sometimes the best investments take time to pay off.
Exactly. So let's start with Avino's La Preciosa project.
Okay, La Preciosa, big plans.
They're expecting that final approval to break ground any day now.
And
their
yeah.
goal is to start pulling out ore by the second half of 2025.
So about 2 years from now.
If everything goes according to plan,
Right, which it doesn't always.
of course,
No.
not in mining,
Mm.
but they seem to be moving quickly.
They do seem eager to get this project going.
Yeah, their CEO was practically bursting with excitement in that investor video.
I mean, I can understand why.
Right, they've got equipment ready to go. The local community is ready for the jobs it'll bring.
It would be a big boost for the area.
It would.
Yeah.
But remember, there's no official feasibility study on La Preciosa yet.
Right, so it's still a bit of a gamble,
It is. Investors are relying on Avino's own projections.
which can be optimistic.
Of course.
Uh,
Now, how about Endeavor's Terranera project?
Terranera, further along.
It is aiming to start commissioning in late Q4 2024.
So less than a year from now.
Yeah. But we have to remember that trunnion failure at Guanacevi,
Right, that could cause delays.
setbacks like that are always a risk in mining.
It's an unpredictable business.
It really is. So it seems like Avino's going for a quick win with La Preciosa,
Yeah, trying to get into production fast.
while Endeavor's taking a more measured approach with Terranera.
Yeah, a slower but potentially bigger payoff.
Exactly. So which strategy is better?
Well, it depends on your investment goals and risk tolerance.
Right. If you're the type of investor who likes to swing for the fences,
High risk, high reward.
then Avino might be the better choice.
Yeah. They're all in on silver. No hedging to protect them if prices drop.
But if silver prices go up,
They could see huge gains.
exactly, and their low production costs give them an advantage.
Makes them more profitable.
Now, for investors who prefer a more conservative approach,
Looking for a steadier, more reliable investment.
Endeavour might be a better fit.
Yeah. Their diversified portfolio and hedging strategy offer more protection against volatility
Plus, Terranera has the potential to be a major producer.
if they can get it up and running on schedule.
Right. So it's a tough call.
It really is. Both companies have a lot to offer.
I'd say it's a tie.
I think I agree.
The best choice for you depends on your individual circumstances and investment goals.
Exactly. We've given you the information you need to make an informed decision.
So do your research, weigh the pros and cons, and invest wisely.
And remember, have some fun along the way.
That's what makes investing so exciting. Thanks for joining us for this deep dive into the world of silver mining.
Until next time.
Happy investing.